GMOs and SPACs. Nothing like two contentious topics to get the investing juices flowing. I am Skylar James. Welcome back to the channel. Today is a deep dive into Benson Hill. They are a cutting-edge agricultural science company and with goals of improving the quality and nutrition of the plants we eat. Let's look at what they do, what they're valued at, and whether to modify the genetics of your portfolio to fit them in. Every investor has their wheelhouse. People get excited about tech or crypto, everything Cathie Wood or Elon Musk. But why isn't anybody talking about agriculture? Is farming too low tech? Not cutting edge enough to change the world? Well, here comes Benson Hill, an ag science play underpinned by proprietary software and gene editing intellectual property. They're taking a data-driven scientific approach to crop improvement. Crop improvement is nothing new. It's been happening, let's say, organically for the last 5,000 years. The company CTO, Jason Bull, framed the company's prospects in a very intriguing way. He says Benson Hill can run simulated trials of genomic combinations rather than the traditional testing in the field. This new approach means massive cost reductions for the firm compared to the old way of planting 1 million test seeds and seeing which one yields the most. And since most seeds in those trials aren't good enough to make it to the market anyway, Benson Hill becomes a big R&D outfit, but without the baggage and costly overhead of field testing their genetic guesses. The CTO also said that this machine learning and AI, in effect, allow Benson Hill to move faster than biology. Faster than biology, because machine learning and AI make predictions about which crop genetics will do best in the field. My investing senses are tingling. The flagship platform at Benson Hill is called CropOS. There isn't much public information on the inner workings of CropOS, just some flashy graphics, but it appears to enable scientists to input desired plant traits and with environmental conditions the plant will be grown in. Then CropOS spits out the genetic combination that would best meet these goals. In other words, which genetics would grow best with those parameters. That's pretty powerful stuff. If you think of the time that traditional seed companies, like the now defunct Monsanto, spent on this 10 or 15 years ago. So with this giant library of plant genetics, Benson Hill says they know which genes to turn on and which to turn off to create the most efficient crop. They'll patent those traits and earn royalties from farmers who grow Benson Hill seeds. That's their financial model. Most of the company's energy is going towards soybeans and yellow peas. With peas, they anticipate an increase in demand if plant-based meats take off. And with soy, they're working on ultra-high protein varieties. Benson Hill's breeding is focused most on increasing the nutritional value that a plant can deliver. Traditional crop improvement has been about more output. More tomatoes per vine, more corn per plant. Benson Hill is targeting higher quality through better nutrition. And this is why they see themselves as an ESG play, fighting world hunger and improving farm efficiency and moving the population away from a meat-based diet. But how can they break into the market? How do they gain customers? Remember, their customers are farmers who buy their patented seeds. Check out this chart of US soybean production. The HT means herbicide tolerant, or said another way, HT means GMO seeds that are capable of surviving exposure to weed killer. 90+% of US grown soy now fits that description. 90%. GMO seeds were only released in 1996, so it took less than 20 years for them to be the main game in town. You know why? Because seeds and plants you can douse with pesticides end up providing a better harvest that make the lives of the farmer easier and farming more profitable. And of this 90%, Bayer, who is the owner of Monsanto, has almost 2/3 of the market share. Bayer's herbicide Dicamba is the reason why. Farmers find dicamba-tolerant soy to be the most profitable. Take a look at this map. This is going to look daunting for Benson Hill at first, but in 2 minutes, you'll understand why this map may actually be the key to Benson Hill's success. These are big soybean growing states, and what percentage is dicamba compatible seeds in each state? There is a huge market dominance here. 65% of the soy grown in Tennessee is purchased for use with dicamba, 76% in Mississippi. Seems like an uphill battle for Benson Hill to break into this stable, mature market. Unless, of course, something unfortunate were to happen to dicamba, like it being pulled off the market, and Bayer saying they won't make it anymore. This after many court cases about unintended damage to crops and Bayer getting concerned about its liability. They own Roundup too. Pesticide litigation is crushing them. Back to that map, because the Roundup active ingredient is actually called glyphosate. Here we see that glyphosate started to lose its potency on nuisance weeds over time. The green map, farmers left glyphosate and moved to dicamba. The right map, they moved en masse too, all in the last 5 years. With dicamba being phased out, this map can flip again and potentially in Benson Hill's favor. Now, 65% of Tennessee is up for grabs, 76% of Mississippi up for grabs. It only took 5 years for dicamba to take a majority share of the US farms. Can Benson Hill slide into this void? They have an herbicide-tolerant soybean in the works as part of a non-GMO venture with an Argentinian ag-sci startup. That's vital because farmers want seeds that are easy to grow while earning them the most money. The trend has been that herbicide-tolerant crops are very important to farmers. If Benson Hill can cover this without a GMO label on their product, it could prove very lucrative for the company. They've contracted with farmers for test plots, which is the first step toward getting their name out there. Farmers will need to see real-world results before they commit their family's livelihoods to a new seed company. How far can they grow, though? Do I think Benson Hill could meet the demand of 15% of these farmers who will need a dicamba replacement? Something like 5 million acres? Sure. And is there room for them to capture market share outside the US? Absolutely. But even more important, if Benson Hill starts grabbing market share, they are immediately an M&A target. Just like Bayer gobbled up Monsanto for its market share and IP, the same could happen here. This space is ripe with global players being acquired by even bigger global players. And what about today's valuation of Benson Hill and this whole SPAC merger with Star Peak Corporation too? Do I buy this now or what? Well, Benson Hill pulled in $114 million in revenue in 2020 with a net loss of $67 million. The merger is valuing them at $2 billion, including $650 million in cash from the merger. If we back out cash on hand, that's about 12 times last year's sales. Adding it back in, it's about 17 times sales. That's a steep valuation for an agricultural company. But is this an ag company or a biotech company? Depending on where you place them, and if it's the latter, this is a tiny multiple for a biotech company. Here are the risks as I see them. With such a large void about to open up as soy farmers seek a new seed to grow, a large-scale ag company could come in and supply all of these farmers en masse, making them their customer in one swoop because they have economies of scale. We saw the exodus of glyphosate to dicamba. The majority of farmers seamlessly moved from one product to the other. If this is an all or nothing proposition, I don't know that Benson Hill can take all of the market. They aren't ready to supply 50 million acres of soy. If this dicamba shakeup was 2 years from now, look out. Benson Hill could be right there taking at least 15 million acres. Right now, they aren't there yet. And I think if a few quarters go by and the company isn't ramping up revenue substantially, the market cap could shrink to half what it will be with the merger of Star Peak Corp 2. But my thought is, if that happens, if the market cap shrinks, maybe that's a good opportunity to take a second look at dollar cost averaging into the position. Make no mistake, Benson Hill is a great M&A target regardless of their market share in 2022. Their IP is valuable, their tech cutting edge, their mission admirable and inspiring. I think it's a good buy now. But if their growth projections don't hold up, then they might be a great buy this winter when the stock goes on sale. I hope you enjoyed this deep dive into an ag tech, biotech, upcoming SPAC, soon to be known as Benson Hill. If you enjoyed the content or learned something new, please ping that like and subscribe button so that you know when the new ones are released. Thank you for joining, and I will see you on the next one.